going on, everybody? Welcome back to Antonio the Realtor. If you haven't heard the news, mortgage rates are dropping and they will probably drop more in the future. To explain that, I brought on one of my favorite lenders in Illinois, John Cams with Rate Mortgage, formerly known as Guaranteed Rate. Hey, Mr. John, how you doing?
Hey, how you guys doing? Thank you for having me, Antonio. I appreciate you.
No problem. I follow you on TikTok. You always do these awesome TikTok lives. You have hundreds of people in at a time. You know what you're talking about. So I decided, hey, let's get John on and talk to everybody about why the mortgage rates are coming down, first of all. So, John, do you want to kind of talk to everybody about why they're coming down?
Yeah, well, I would say that the biggest thing is the news that broke yesterday. They've been coming down if you look like over the last 6 months. If June, July last year, rates were low sevens, and right now we're low sixes, just under 6%. So just over the last 6 months, rates have come down pretty dramatically. But the big news was that yesterday, President Trump uh, let everybody know that Fannie Mae and Freddie Mac are going to be buying 200 billion in mortgage-backed securities to drive the uh, bond market, the mortgage-backed bonds, the prices up. So these basically injecting liquidity into the mortgage bond security market, and bonds and rates are inversely related. So if the price of
Yeah.
bonds goes up, rates come down. So the whole point is that he's injecting liquidity into the market. And I think what's really happening is you're just seeing the tone shift, right? That's
Yeah.
really a lot of people have said, like, oh yeah, $200 billion isn't anything. And during COVID, the Fed was buying trillions of bonds, and that's true. However, the sentiment and the tone is changing to where we're in a midterm year, and they want to make housing more affordable. And there's a lot of different things and headwinds like inflation and jobs that are going to help contribute this. But ultimately, this is going to do one of two things. It's either going to stop them from going up as much if they do go up, or it's going to drive them down. And if you look at what happened so yesterday, when in the video I said that it was a seesaw day, right? Like, so President Trump comes out and says that, I think he said he wants to double the military budget. And how do they do that? Well, they're gonna issue bonds, government bonds, not mortgage backed bonds, but they're gonna issue bonds, and that's gonna put supply into the market for bonds, the 10-year treasury. And what's that going to do? That's going to drive the price down. So if again, like I said, they're inversely related. So if the price of bonds goes down, rates go up. So when he said that he wanted to double the military budget, the market was like, oh my gosh, we're going to have to issue bonds to pay for that. That's going to flood the market with supply, driving the price of bonds down and make rates go up. So yesterday, the mortgage-backed securities were down about, I want to say, 20 basis points. So we're like, oh, rates are going to be going up, or at least trending up. And then in the afternoon, he comes out and says, oh, no, I'm going to also direct Fannie and Freddie to buy $200 billion in mortgage-backed securities. And then you saw a complete reversal at 3:30. So we ended the day, mortgage-backed securities ended the day up big. And then today they were up, in the morning, they were up even more. They were up like 100 basis points, which is huge. And then when the jobs report came out, they lost a lot of steam, but then they clawed their way back. So yeah, if you look at just from the whipsaw action of it, you had rates come down just in like a 2 hour time frame to about a 0.5%, which is pretty big in like a 12-hour period for
Yeah,
mortgages,
that's
right?
that's
To go
wild.
down.
That's
Yeah.
wild, man. That's crazy. I know.
And
And
then they settled down like a
NBC
quarter. So
NBC News has an article on right now saying that mortgage rates just fell below six for the first time in years. And then through
yeah,
my feed, like on Facebook, I have realtors posting 5.99%. So
yeah.
I'm also getting phone calls myself now. People saying, "Hey Tony, is it true that the rates are going to come down under six?" And I'm like, "Well, technically they have
Yeah.
5.99. Where do you see this going? Like, do you think it's going to get to five and three quarters, or what? What does
Oh
that
yeah,
look like for you?"
absolutely. Yeah, I'm an optimist, I guess, but I've been forecasting. I think rates are going to be 5.5 to 5 by
Oh
like
wow,
by the end of the year. If you look at what's going on in the jobs market and you look at what's really, even though the unemployment rate ticked down slightly, if you look at they had pretty significant negative revisions to October and November. So I think that you're in again. The primaries are this. I don't know if you guys saw, like, President Trump basically said that, like, there was a TikTok I saw where he's like, if the Democrats win, uh, they're gonna impeach me. Like, so that's like, he's so I think he's gonna like do everything he possibly can to, and this isn't to get political. I'm not trying to, like,
No, no,
say
no, that's totally fine.
who's
You
whether
speak
you're what
what
yeah.
you know, man. Just
Yeah,
say it, man. You're good.
whether you're blue or red, like, the facts are he's going to do
Yeah.
everything he can to try to have a Republican win the primary, the Republicans win the primary, and that's going to entail making things more affordable. And I would say that the biggest thing, so you have that, and then if you look like next week, guys, just so you know, we do have a CPI number coming out again. And what happened last month was that they were forecasting CPI, which is basically an inflation gauge, right? Like, if inflation is up, then rates go up, and if inflation goes down, rates go down. So last month, the inflation they were forecasting, I want to say 3% was that it was going to be, and it actually came in at 2.6%. So it, like, shattered expectations, but that report got shoved to the side because they said, well, yeah, that was because of the government shutdown. You didn't have the data up, or the data wasn't accurate. And this month they don't have that. So if the and I think the Philly Fed is forecasting that it's going to remain at 2.6. So if next week inflation comes in at 2.6, so you have basically an undeniably deteriorating jobs market, even though supposedly the unemployment rate ticked down. You look at the job creations over the last year, and then you look at the fact that with the revisions, like, I want to say they said that 50% of the jobs didn't even exist last year after the revisions, is what they came out in September. Or they came out with that just recently. But yeah, I think if you look at that, and then if inflation does remain at 2.6, there's just going to be so much. There's already so much pressure on the Fed to lower rates, and then you got Jerome Powell stepping down, or his term is up.
Yeah.
Trump's pretty hell bent on getting somebody in there who's going to cut rates. So I do think that all signs really do point to. I don't think we're going to see threes and twos and fours, but I wouldn't be surprised to see, like, 5.75 to 5.25, 5.5 to 5, and that's going to be huge. I mean, when you really think about it, we are really slammed right now, and it's because rates are, even though everybody thinks rates are high, to the people that were sitting looking at 7.25, 7% 6 months ago, rates are low. You know what so we've seen a big influx of business, and I'm sure you've seen a lot of
Yeah, yeah,
activity
yeah,
ticking
yeah.
up.
We admit,
And
the way late December, right after Christmas, almost like the 26th. My phone went crazy on the
yeah,
26th, and that's
I
out
mean,
here in the Chicago market.
we've never had I've never seen a December and January this busy. Like, we're usually pretty dead in December and January,
Yeah,
much
no,
to, and it
I
drives
know
me
how that is.
nuts. But like this year, we're very busy. So yeah, the other thing I heard too that I thought was really interesting, they said that because a lot of people, like, the post I made yesterday went semi, in my world it went viral, right? I think it's got like 17,000 views, and, like, there's a ton of commentary on there, people commenting. And one of the things that is kind of prevalent is that, oh, this isn't going to help, and rates, it's just going to make home prices go up more. And the facts are, guys, 67% of people own a home. So if you're a homeowner and prices go up, is that a good thing?
Of course.
Hell yeah. Do you know what
Yeah,
I'm saying? So
yeah,
67% of people are going to be happy that houses go up. And if you buy now, you're going to be, you want to buy now and have houses go down? I don't.
yeah, yeah.
You know
No,
what I'm saying? So
I'm gonna interject here. So regarding the fact that the prices are set to go up, period, from what the people, the top dogs in the market in Illinois and Chicago, what they're saying anyway, is that we still have about a 5% wiggle room to go up anyway.
Oh
But
yeah.
the other side of that, I want people to think about this. Property taxes aren't getting any cheaper. Okay. Property taxes are going up basically everywhere. So yeah, the rate's going to come down. You think naturally their property value is going to go up. But I think what's going to anchor a lot of those properties from just going through the roof is the fact that sure, your property can go up, but if it does, what are we going to do about the $10,000 property tax bill that's going to turn off a lot of consumers from pulling the trigger on buying your home? What are we going to do about that? You know,
Yeah.
which
Well,
leads to
that.
the other
Yeah.
rumor that supposedly they want to get rid of property taxes, but how's that going to happen? You know?
Yeah. No, well, that, and I think also, I heard something else that was very interesting. And I was telling a woman that I was helping, that wants to buy some more investment properties, is that even if rates do come down, the one of the major headwinds is that people are just strapped for cash. So people don't have the down payment and the liquidity to necessarily buy like they did during COVID, right? During COVID, there was all the stimulus. People were getting stimulus money, and we were coming prior to COVID. Rates had been, relatively speaking, low for a long time. So people right now are sitting on the lowest amount in savings like since 2008. So even though you have rates coming down, it's going to help, but I think what's going to also temper demand, like you said, Antonio, especially here in Chicago, is the fact that, the taxes obviously, but then the fact that people don't necessarily have a lot of money to go buy homes right now, as
Yeah,
far as
the
like.
majority of my deals right now and last year, I'm talking about 2025 now, is
Yeah.
just about everybody needed down payment assistance.
Yeah.
It wasn't even, "Hey, you know what? I'll think about it. Let me see if I can just use some of my own money." It was, "No, Antonio, if you don't get me down payment assistance, we can't buy a house." And
Yeah.
that was the experience that I had, last year.
Yeah.
And I was selling houses between 300 to $600,000, and everybody needed it. Nobody only I think only one client actually placed out of the ability, like, they didn't qualify for it because they made more than like $130,000 a year, but
Yeah.
everybody else was basically dual income. Everyone
Hmm.
was dual income, and they still were able to get down payment assistance, so that was a surprise for me that they all needed it, you know?
Yeah. No, I think that it's going to continue to, I think rates are going to continue to come down, and I think that yeah, I mean, it's funny because all the haters have had to eat their hat every year since rates started going up in 20. I remember when rates went up in 2022, it was, oh my gosh, you just wait, 2023, the market's going to crash, real estate market's going to crash. And then 2024, same thing, 2025, same thing. And here we are in 2026, and rates are coming down, and I feel like the headwinds, or the talking heads, whatever you want to call it, saying that the market are going is the market, the real estate market's going to crash, are louder than ever right now. Would you agree,
Yeah. Oh,
Antonio?
yeah. Oh, absolutely.
And it's just like, okay, guys, we'll see what happens when uh rates come down. And the other thing I do think is a little funny is that, like, on the TikTok commentary that I had with a lot of these comments, is that, like, it's, oh well, this isn't going to help, and prices are going to continue to go up. And so it's like, so you want prices to be high and rates to be high? Like,
Yeah.
like,
Yeah. That you pick
do you know
yeah.
what I mean? Like, that's what some people like. And it's just emotional, right? Like,
It
everybody's like,
is.
it's strapped
It
and
is because
like.
people will argue in the comments, "Oh, this isn't
Yeah.
good for the economy. It's not good for the economy," but meanwhile, their checkbooks aren't balanced. And
Yeah,
it's like
exactly.
you
They
gotta
can
worry
barely.
about at home
Yeah.
first,
Yeah.
and then go and give us your worthy, commentary on how the nation should run.
Yeah.
It's
And
wild.
the other thing I would say real quick too is that, of like all the like smoke and mirrors, right? The, like, oh, the 50-year mortgage, that's never going to probably happen. The portable mortgage, right?
Yeah.
That's never going to happen. This is happening, right? Like, the
Yeah.
FHFA has already confirmed it. And I think it's going to be just the beginning of like a big liquidity infusion into the market, which, what that means is that they're going to start buying bonds and driving rates down. And the best to be in it now, before, like I said, if you buy, and prices go up, that's a good thing. If you
Yeah.
don't buy and prices go up, well, then you're right where, then that's a bad thing. So
Before we wrap it up, I want to ask you a very general question for everyone that's listening right now. I know overall conventional loans are the number one loan used right now. Then it's FHA, VA, USDA. Between conventional and FHA, with all of these changes that are going on, which one of those is going to have the lower rate, conventional or FHA?
FHA always has a lower rate.
Okay, just
Always. Yeah.
historically, it's always going to have it.
Well, the reason why is because you like, how do you get a lower rate with a conventional loan? What do? You pay points,
Yeah.
right? That's like what people do. Like, oh, I need to buy the rate down. So
Yeah.
with FHA, you you automatically pay points. People don't say that because they call it upfront mortgage insurance premium. You know what I'm saying?
Okay.
But
Yeah.
like
Yeah. Yeah.
when you get an FHA loan, you pay 1.75%, and it's called an upfront mortgage insurance premium, right? So you're basically paying 1.75 in points, whether you want to call it a widget or an upfront mortgage insurance premium, right? You're paying an insurance policy upfront to the tune of almost 2 points on an FHA loan. And then so they're more insured, and they're government backed, so that's why you get a little bit of a lower rate. So you're always going to see FHA is usually always like about a quarter of a point lower than conventional, but the devil's in the details, right? Like the oftentimes the spreads have been weird on conventional and FHA, and the we've had an anomaly where FHA is slightly lower payment than conventional as of late, but usually that's not the case. Usually conventional, even with the higher rate, is lower, like a lower monthly payment than FHA. And then keep in mind, FHA, uh, the monthly mortgage insurance premium, they don't call it PMI, they call it the monthly mortgage insurance premium, same thing, right?
Right. Same thing.
Uh, yeah, you're paying that for the life of the loan. So when you look at the overall cost of an FHA loan, even though you may have like it may be $75 less upfront monthly because of the lower rate, like the overall cost is going to cost you a lot more. And then, as you know, you can be ostracized with an FHA loan, especially in a competitive buyer's market when there's multiple offers.
Yeah.
All things being equal, you go against a conventional loan offer, you're going to lose hundred
Yeah.
hundred a hundred
Yeah, it's
times,
almost
right?
like aces over kings, you know what I
Yeah,
mean? That's the
it's
way realtors
unfortunate.
explain it, yeah.
Well, I mean, it is. If I'm a seller, I mean, the facts are they view, and this is why I think it's. I deal with these people, a lot of these people on TikTok a lot, where they have a loan officer who is like, yeah, but the payment's lower, but they don't tell them that they're going to be ostracized. So imagine if you actually qualify for for a conventional loan, and you lose your dream home because you have an FHA pre-approval because it was going to save you $75 a month.
Yeah.
That would
Yeah, no,
be
I
pretty
explain to
annoying.
all my clients I explain to all my clients, this is
Yep.
the w cash is aces, kings
Yep.
is conventional, and then your queens are FHA,
Yep.
unless that FHA offer happens to be more than the conventional.
Yeah, obviously you're going to have to pay more, right? And
Yeah.
like all things being equal, but I'm sure you can attest that you have to potentially pay a lot more. You know what I mean? Like I wouldn't be surprised if a home is $400,000 and FHA offers 5,000 more. You may lose that to you know what I mean?
Yeah,
Like to a
yeah, depending on the agent, because some agents will really push and say, "Hey, I don't care if it's more, go conventional," because maybe there's a
or
fear of the FHA home
or
inspection or whatever.
or they're going to be like, no, if you, sure, maybe 410, 415. You know what I mean? It depends on the
Yeah,
seller, depends on the
it's gotta be
realtor.
aggressive. It's better if
Yeah,
it's aggressive, yeah.
yeah, it's got to, and then obviously, like you said, then and on a side note, uh, condition, right? I think the condition of the property, what FHA, I always like to tell people the give and the take with FHA, right? The give with FHA, lower credit scores, much higher debt to income ratios. So you can get things done. You can bite off a lot more than you can bite off a lot more than you can chew with an FHA loan and still get it approved and have a lower credit score. That's the give. Now, the take is that they come with much higher foreclosure rates. So the investors want a much nicer property, or much, they will not allow you to have a lot of deferred maintenance on an FHA loan. Like chipping, peeling paint is a great example. If you have chipping and peeling paint anywhere in the house, it's going to have to be scraped and repainted, right? And the whole point is that they're like, well, we know that there's going to be a higher uh, percentage of people going into foreclosures on these, and we don't want to foreclose, or they want to mitigate foreclosing on a house that they got to do a bunch of work on.
Yeah,
So
absolutely, man. Well, John, really quick before we go, do me a favor. Give me your NMLS ID number right now, if
yeah,
you
so
could.
my NMLS is 224285, which means
Perfect, man.
I'm an OG because there's
Yeah,
only six numbers.
we want to keep you legal here, man. You're licensed in the United States, am I right?
Yes, my branch is licensed in all 50 states.
Perfect. Okay, then how can people contact you if they want to work with you?
Yeah, so they can call me. My phone number is 773-939-1521. And you guys can email me anytime at really easy, K is in Kelly, J is in John, G is in group at rate, R is in Robert, A is in Apple, T is in Tom, E is in Edward.com. And you can
Perfect.
follow me on TikTok. I am Mortgage Unk.
Yeah, Mortgage UNC, Mortgage Unk.
Yes.
All
Yep.
right. John, I appreciate you, man. I'm gonna go tell everybody goodbye, man. But thank you so much for joining.
All right, buddy. I appreciate you.
Hey,
Have a
no
great
worries.
weekend. Later, bud. Bye.
You All right, guys. So that was John Cams from Rate Mortgage. I am located in Chicago, or actually, I'm located in Chicago, but licensed in Illinois and Indiana. If you guys have any questions for me, you can contact me at 708-205-7121. Of course, please subscribe to the YouTube channel, and then keep an eye out for more educational video content regarding real estate like this for Illinois and Indiana. And I also have a ton of property tours that I'll be doing throughout the year. So thank you so much for watching the video. Again, my name is Antonio with Realty of America, and look forward to meeting you guys hopefully in the future.